Jerome Powell saved the stock market today by helping to lower long-term interest rates. He left the short-term interest rate maximum at 4.5%, so he left that alone. But by reducing the amount of securities that the Federal Reserve is taking off its balance sheet, by reducing that, they have the effect of reducing long-term interest rates, which actually is more significant because it affects your home loans and your car loans. The market was very bearish prior to this, and there were thoughts that Powell was going to come out and maybe even be hawkish. But he fortunately came out and was dovish. And in the long-term interest rate arena, he was very dovish, which saved the stock market and sent it upwards. Concerning this, the statement read that beginning in April, the committee will slow the pace of decline of its securities holdings by reducing the monthly redemption cap on Treasury securities from $25 billion to $5 billion. Okay, this is actually kind of a genius move. They don't have to change the short-term interest rate, which I think they're reluctant to do because that will take away their ability to control inflation as well. And this way they can play around with the long-term interest rates and still help or restrain the economy. And to show you what a massive effect this is, remember that reducing their balance sheet lowers long-term interest rates. At one point, it was over 8 trillion. It was going towards 9 trillion. And now you can see that it's gone towards 6 trillion and some. So they've reduced it at least $2 trillion, which tends to have an effect. As you can see from the chart, all the major indexes were up for the day, with the NASDAQ coming up 1.4%, the S&P 500 coming up 1.1%, and the Dow Jones Industrials coming up 0.9%. On the CNN Fear and Greed Index, the stock market is still in extreme fear at 22. It's a slight improvement. I guess the day improved it slightly from a week ago when it was at 16. Which is very extreme fear. A year ago, we were in greed at 69. Those were the days, huh? Just a friendly reminder that this is not financial advice because I do not know your personal situation. You need to do further research and gather further information to decide if the investments I present are right for you. With my individual stocks, I'm most excited about BYD, whose symbol is BYDDY, as they have come up with 5-minute charging. And Tesla keeps having trouble. They came up in the market today, but I think Tesla should have developed a cheaper economy car rather than the Cybertruck, in my opinion. I think they missed the mark on that one. And you can see BYD, symbol BYDDY, keeps going up nicely over the last 5 days. It's made over 14%, and I expect it to continue. Its relative strength is almost 64, which is good. Berkshire Hathaway, under the leadership of Warren Buffett, continues to go up nicely. In the last week, it's gone up almost 6%, and its relative strength is almost 60, which is good. This has a cash reserve of over $300 billion and is considered one of the safest stocks you can invest in right now. Also, I like the fact that it pays no dividends. That's a big attraction for this stock. If you need to park a lot of money someplace that's relatively safe and you don't want a taxable event, Berkshire Hathaway seems to be the ticket. On the other hand, right now, I like an ETF that pays dividends. for the companies that pay the highest dividends around the world. It's the Spider Global Dividend ETF, symbol WDIV. This is for my retirement accounts, and I have a moderate amount in it, but I will put major amounts into it if they ever start cutting the interest rate, as it pays over a 4.7% dividend. Plus, you get some appreciation from the company stock going up. And you can see in the last 5 days, it's gone up over 2%, and its relative strength is 56, which is good. I generally do not love gold, but there's times when it hits new highs. It's hitting all-time highs right now. It's gone over $3,000. And my way of playing this is to buy a gold mining stock. And I simply was trying to find a good gold mining stock with good numbers and a good long-term record. And I think I found one. The gold mining stock I selected was Alamos Gold Incorporated, symbol AGI. Its price to earnings is about 21. Its earnings growth rate is 27%, which is excellent. Looking at the 5-year chart on AGI, you can see that it's made over 390% in the last 5 years. The D's you see on the chart, it pays a small dividend, 0.38%, which really is of no consequence. But I thought I'd better explain what all the D's were doing there. It's just a small dividend. But they have a good long-term record, and they've especially gone up since 2023. So this seems like a good, solid gold mining stock, as the price of gold doesn't appear to be able to be stopped. So the gold mining companies should make good profits. We will see. I bought 1,000 shares, which actually is a small amount for me, but I'm just going to play with it and see what happens. I got stopped out on my Progressive Insurance stock, symbol PGR, and I think I know why. Their earnings report, they beat on both the top and bottom lines, but they are not doing a good job of investing in securities. Insurance companies take the money that you give them and invest it in stocks and bonds. And they did well the previous quarter, and they made like 80 million. But the last quarter, they lost 110 million. So, wow. And the price took a dive after that report. But it's strange that you have a company whose insurance business is doing fine. They just aren't investing very well. Maybe they should just put it in a money market, would be my advice. But I think I'm staying away from the stock for now until they get that straightened out. And I will be looking at the next earnings statement. So what happened with Progressive Insurance, PGR, is why I always put a trailing stop loss of about 4% on my stocks, especially stocks that I recently invested in and don't have a long history with, especially those. In the last week, at one point, it hit a high point of 291, and it hit a low point of about 271. So my 4% stop loss definitely saved me a lot of pain.